Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, February 5th, 5:26 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Market state, we're in an uptrend. See the trend gauge over here. We've got three green arrows across the three time frames that we track the indexes by. Had some improvement. The only outstanding uh, index that is not above the key levels that we track are small caps. They are right into the 50-day moving average. However, we also don't have all of the moving averages stacked the way we want to. We still have some indexes with the 21 below the 50. We prefer to have them stacked short term above medium term, above long term, but we're making progress. Market leaders added a green arrow under the neutral, green sub arrow under the neutral indicator as uh, pretty good performance by leaders over the last 3 days off the bottom after the tariff shakeout on Monday. So what happened today? This was day two of the post-tariff turmoil bounce, and it was led by small cap, mid cap, and leading stocks also with another good day. Here are the numbers. Our 21 over 21 leaders list up an average of 1.62%, 17 out of the 21 in the green. However, the big eight led to the downside by Google and Tesla, down an average of 0.77%. Google, this was on disappointing reaction to their earnings, but green on the rest of the screen as our RG8, all eight of the components were higher by an average of 1.2%. The six indexes will check the returns when we look at the charts, but equal weight NASDAQ stood out here. If you'd have told me that Google could not recover its gap down after its earnings, but the Qs would finish up by almost 0.5%, I'd have told you I do not agree with that, but that's what we saw. Equal weight NASDAQ 100 doing very nicely, up 1.14% today. Global 60/40 up a little less than 0.5%. Our flagship GROTECTION portfolio up 0.56%. Let's get to the charts, and we'll start off here with the S&P 500. 60-minute chart is the best way to look at this consolidation that we're in. Basically 13 days with one shakeout, that being the tariff turmoil shakeout Monday morning, but we recovered from that quickly despite finishing down on Monday. Uh, Nice green close on Tuesday. Gap down today, Wednesday, but recovered late morning and closed at the highs of the day. Bulls really couldn't ask for much more after what we saw with the week close on Friday and then the gap down on Monday. Again, all tariff related, but as of now, we're in a 13-day consolidation. You could also choose to draw it this way and add 2 more days on, which is when we broke this downtrend line. So 13, 15 days, basically 2.5, 3 weeks, no matter how you look at it on the S&P 500 with a fair share of volatility mixed in there. Equal weight S&P 500 undercut and reclaimed the 21 and 50-day moving averages today on the gap down at the open. NASDAQ 100 gap down at the open again. But all it did was bounce right at the 21-day moving average and proceed to work its way higher with a close at the high of the day. Note relative strength still lagging on the NASDAQ 100. The leading index year to date, the Dow Jones Industrial Average, putting in a nice cup and handle formation there. Mid caps, the second leading index year to date, undercut and two closes below the 21 Monday and Tuesday, reclaimed the 21 and the 50-day moving average today, showing some outperformance, and the Russell 2000 showing some outperformance today as well. You can see one close below the 21, regained the 21 yesterday, regained the 50 today. It's right near the top. So this is looking like a false breakdown out of this 2-week consolidation, kind of similar to what we saw with the 13-day consolidation on the S&P 500. So back into the range, right at the top of the range. and the IWM does not show a significant close above the 50-day, but the Russell does as well. Second close above, we can take that blemish off the trend gauge for small caps, and we'll be looking to get into a position in Russell small caps if we decisively break above that level. So those are the major indexes. A little bit of more good news. The VIX down and with a 15 handle now. You know we like to see this below 16, which implies 1% daily volatility on the S&P 500 over the next 30 days. Uh, Still coming down on volatility on the S&P itself from an average true range perspective. We're at 1.15%, but it is slowly declining. Let's go to the US dollar. This is kind of important. It looks like we had a false breakout on the dollar Monday morning because we reversed to close, and again, this is tariff related. Reversed to close mid bar and then followed through to the downside over the last 2 days with weakness in the dollar, and that's corresponded to strength in the market. How has that corresponded to gold? Gold continues to be on a very strong run. This is something called a shooting star candle. Uh, Sometimes you see reversals if you get too far extended. We were 4 ATR extended from the 21 day today on gold. We did some offensive trimming on our GLD position. Also, on our nugget position as it came between +3 and +4 ATR. You can see how that pulled back a bit. I'm showing GDX, but nugget kind of the same pattern we use GDX. Never use a leveraged ETF's chart to make judgments. Always go to the underlying chart because of the derivatives and the way they reset every day to sync up with the underlying chart. So and kind of funny, I said silver doesn't seem relevant. It responded with a gap up and more upside today, but really not relevant unless it starts to break above this 29.43 level. But that's kind of funny how behavioral finance works. We just got tired of staring at this for 3 months going nowhere. And what does it do when we stop looking at it? It responds with a breakout above that level. You can see I had an alert here that did remind me this morning never to make judgments on anything. But really, we have now I've spent 30 seconds talking about something I didn't even want to talk about in the first place. We got valuable audio time in these nightly videos, and we don't really want to waste it on things that aren't critical. Now that I've wasted enough time, BND. This is nice to see the bond prices break higher, and I'll show why on the yield chart in a minute. But bonds up, yields down. That's good news for the market. You can see TLT with a clear breakout here. Yesterday morning, let's go to 0TNX. So yesterday morning, we were looking pre-market at a potential wedge pop here, which was a breakout of a downtrend line in yields. When we gapped up Tuesday morning for yields, but it reversed, closed at the low of the day, and now proceeded to the downside today. So this is a failed wedge pop on yields. That's the TNX, that's the 10-year. TYX shows the same thing. Failed breakout and then strong move to the downside. Again, this is beneficial to stocks. So that's our inter-asset correlation. Let's go to the tail of the tape. Next key economic data point we'll be looking at will be the government non-farm payroll report Friday morning before the open. Keys coming into today, S&P against the 21 and the 50, above it, positive. NASDAQ against the 21 and the 50, also above it. Russell against the 21, reclaimed it, and the 50, so we'll add the 50 for tracking going forward. And how did Google react to earnings? Definitely negative, but as I mentioned, NASDAQ 100 recovering and finishing green. Day count, we're in a 13-day consolidation, 13 to 15 days. Uh, 8-day moving average, second day above, and the slope turned up. 21-day moving average, second day above, slope is pointing positive as well. And that's where our expectations are. As long as we maintain above the 21 in the S&P and the NASDAQ 100. Sectors today, semiconductors, biotech. Kind of funny with semiconductors. Google reported their earnings and disappointing, and it gapped down, but they reaffirmed $75 billion in capex spending, and semiconductors and AI data center names bounced nicely off of that, pretty much up across the board today. So bad for Google, good for semiconductors, although aftermarket ARM, which has had a pretty strong run over the last couple of days, is down over 5%. So biotech, cloud software, banks, gold, and silver stocks also positive on the day. To the downside, crude, XLBCY, that's basic materials, communication services, that's because of Google, and Y is consumer discretionary. Tesla and Amazon down in there, and Amazon reports tomorrow. That'll be one of our keys after hours, and transports down as well. Portfolio did some offensive trimming in Nugget and Gold as they were extended +3 to +4 ATR, added to CEG, and trimmed Palantir. Now, we'll show Palantir here in a minute, and I'll discuss why. But the bottom line, day two up after tariff turmoil led by small caps, mid caps, and leading stocks. As I said, add Amazon ER after hours tomorrow. That's a fairly big impact on the indexes. So let's go back to the charts, and first we'll show Palantir. So uh, big gap up, volume big, but not outrageously big. We've seen like we prefer 400 or 500%, but this is an extremely liquid stock to begin with, trading 82 million shares. So we were it one thing it did today, which is not a positive, is undercutting the low of the prior close, or of the gap day close. Close back inside that, but below the gap day close. Those are negatives for it, not a death knell, but that ad that we did yesterday around 103.60, when we broke below the lows and struggled a bit getting back above 100, we took a very tiny loss in that, right around the 100 101 area. So small loss there. Still holding the shares that we held before the gap up and the after hours buy, which is around 97. Uh, we'll continue to hold those if it continues to. What we're really waiting for is the 8 EMA to catch up now. Want to see it hold today's low again, obviously, and see what happens when the 8 EMA catches up. But really looking at this chart, this has had two gaps up back around 33. That's a uh, going from 33 to 100 is a 200% gain, up three times a 200% gain. And can you squeeze that much more out of it, out of this liquid a stock? The more I thought about it, the lesser my expectations went. Obviously, if a bunch of money comes into it and it starts to punch higher, we'll stick with it. But I have lowered my expectations because of that. But I've been wrong more often than I'm right. But when I'm wrong small. And when I'm right, we let things run. So that's Palantir. Let's take a look at the names inside the 21 over 21 that we hold. We'll go through these charts. Reddit continuing to make a higher high. Bros, higher high. Hood, higher high. CEG, uh, highest since the shakeout after the DeepSeek Deep Red Monday a week and a half ago. Some of these stocks won't recover, some will. I said at the time that a lot of it would probably be tied to the earnings reports, and we're not seeing massive cuts in the data center spend from the big hyperscalers. When those cuts start, that's when this run will end. The fundamentals will be still fantastic when it happens, but when it happens, uh, when you see the first signs of cutting spending in these, That's when that party will be over for that. So CEG added to that today. Snow uh, started the day weak, bounced at the 8 EMA just where we wanted it to. And as I said, Palantir trimmed the second buy that we did yesterday after the open. We bought it about 103, sold it around 170, 101, something like that. Very tiny loss. So that's what we own. Let's take a look at the big winners on the day in the 2121 that we don't hold. And Celestica, this is one that gapped down on DeepSeek Deep Red Day, reported earnings afterwards, and has made new highs. Just a leader. Interactive Brokers continues to work its way higher. It's now hit pivot plus 20%. AEM Gold not overly extended, but into the 100 Livermore level may rest there as well. How about to the downside in the portfolio today? The weakest was AppLovin, but it's just forming a nice base. Here's the event. Earnings in 7 days will probably result in a move one way or the other. You can see how it gapped up after its last earnings report. Palantir week, already looked at that. Snowflake week, we already looked at that. SE finished slightly negative on the day, but nothing wrong with that chart either. Our 21 over 21 holding up very well. And with that, I'm going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855 Real Wealth. That's 855 732 5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. Reminder, our flagship portfolio, GROTECTION, and our more aggressive version, TurboTection, run by Ted and Connor. They are designed to grow assets during uptrends. When things start to pull back a little bit, we back off the gas. If we go into a bear market, we get the heck out of the way. So there's a grow part and a protection part. And right now we're in growth mode, not pedal fully down as there's a lot of cross currents going on, and we're in this 3 week consolidation on the S&P 500. The way it resolves will result in us either increasing or decreasing exposure. And with that, I'll wrap it for Wednesday, February 5th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Reveritas, nothing but the truth from Revere, facts only. And thanks for listening and have a great day.